Hello, everyone, and thank you as always for tuning into our monthly market update. If you enjoy this content, please, the only thing we ask for is to click that little subscribe button down below. We truly appreciate the support. All right, lots to get into today, including what the heck has gotten into the detached market all of a sudden. And I will also briefly touch on some of the changes announced by CMHC to insured mortgage guidelines. So without any further ado, let's take a look at the numbers. As always, let's start off by looking at our market activity table for the last 6 months. So as to be expected, really, the May sales numbers were up from April by a relatively healthy amount, I would say. That's not to say that 1,495 sales is a healthy sales figure for mid-spring, but of course, 2020 has not exactly been a healthy year, pun intended. So sales figures are up nearly 34% from the previous month. But then look at what's been happening with active listings. They've barely gone up from 9,389 to 9,927. In fact, they've barely gone up since December, but have been especially level for the last 4 months. And so with more sales and virtually the same number of active listings, our inventory from last month has began to get eaten up, and that moves our months of inventory from 8.5 months and a strong buyer's market to 6.7 months, which sits just above a balanced market. Remember, anything above 6 months is a buyer's market. Anything between 4 to 6 is a balanced market. And just to recap why this is so important, months of inventory indicates which direction prices are going to go. It's a metric of supply and demand. So if there's more and more supply, more and more listings, the only way that sellers can start separating themselves from the competition is to start cutting price. Which then becomes the new comparable for the next sale, and prices begin to slowly move downwards. But right now, because sales have gone up and inventory has remained more or less the same, prices have held relatively steady despite the economy essentially being shut down. And as you can see here, a very tiny price drop this month by 0.7%, but this is actually the first time that prices have moved down in over 8 months. So we've had 8 straight months of consecutive price increases. So is it all roses? Well, no, of course not. Going back to that 1,495 sales figure, let's put that into perspective. Although the market is nearing balanced market territory, 1,495 sales is 54.4% below the 10-year average for the month of May. To give you a little bit more perspective, I've shown you that last month we were hovering at around, the last few months we were hovering around 9,000 active listings. Well, look where we were in May 2019, 14,685, which is 48% higher than this year. So imagine where our months of inventory would be if we had the same amount of supply this year as we had last year. Clearly, people are still very hesitant to put their homes on the market and have strangers, walking through their house. What I'd like to get to next is a breakdown of months of inventory by property type. Let's start with detached, where we are currently sitting at 7.4 months of inventory, which is very interesting. That's followed by townhouses at 5.3. So townhouses are in a balanced market, followed by condos, which sit just into a buyer's market at 6.8 months. And here's where I think things have gotten interesting. It's been no secret that the single family detached market has been the weakest of the 3 property types in recent years. And that's been that way by a long shot. We've all seen the headlines saying how the condo market is the only thing that's propping up Vancouver real estate, which is absolutely true. So having said that, what the heck's happened since from April to May this year? In April, single family was sitting at 10 months of inventory, and in May that dropped to 7.4. So don't get me wrong, 7.4 isn't great, but it is the largest decrease out of the 3 property types, which means inventory is getting eaten up, which means detached houses have picked up momentum and are moving again. I'm going to be very curious to watch this in the coming months because this actually really surprised me. There's still a consensus that the detached market is out of reach for most people in the region. And perhaps the current rate war that's going on has something to do with this. And speaking of rates, I'd like to finish off by quickly touching on the changes to lending rules announced by CMHC this past week for insured mortgages. In late May, CMHC CEO Evan Siddall made headlines when he released his spring forecast, predicting that Canadian house prices could fall anywhere from 9 to 18% over the next 24 months. So clearly, the government-owned insurer feels that the market is at a heightened risk level. And this past week, they announced that they would be tightening their lending requirements. Now, remember, only mortgages with less than 20% down payment need to be insured through CMHC. And I will add that the other major insurer in Canada, which is Genworth, has announced that they will not be following suit with CMHC's new changes. But here's a quick summary of what they are. Number one, decreasing the gross debt service ratio, the GDS, from 39% to 35%. Number two, decreasing the total debt service ratio, TDS, from 44 to 42%. And if you'd like more details on what those actually are and what they mean, just hit me up in the comment section below or by email. Number three, raising the minimum credit score to 680 from 600 for at least one of the applicants on the application. And number four, no borrowed down payments. So if you're thinking about tapping into that HELOC, the line of credit that you have, no more. You have to have cashola sitting in the bank if you're thinking about buying. Now, I'm obviously not a mortgage broker, but if you'd like more information on how these changes could affect your buying power, please feel free to get in touch with me. I'll happily connect you with a trusted broker. From some of the numbers being bandied around, however, I've heard that this could affect buying power by up to 12%, but since Genworth has not followed suit and will not be following suit with these changes, it's certainly debatable what sort of impact this will actually have on the market. All right, that wraps it up for this month. Thank you again for watching. Please click that subscribe button down below and we'll catch you next month. Thanks so much. Take care.